All right, welcome to another installment of the Life Happens podcast. I'm your host Ryan Dotson. With me, as always, is Shawnee Mack, aka I'll have the number one medium with the Coke. Yeah, the Big Mac meal. Shawnee Mack, welcome to the program once again. How you doing?
As always, excited to be here, man. Excited to get into it with you.
Very exciting topic. Actually delayed us a day because we were so amped up about it. We're talking buybacks today. We're talking stock buybacks. We're talking about companies buying their company back, taking back control.
Yeah. Yeah, it's an interesting concept, an interesting topic. So it might not sound all that harmful. We'll get into why it may not be the best idea in the world and, why it was once illegal. But yeah, we're talking about companies, publicly traded companies. We're talking about the stock market going out there and buying their own stock back. It's called a share buyback. Companies do it all the time on a regular basis. Usually they announce their share buyback and they tell their investors how much they are going to spend. It's not some sort of hidden behind the scenes financial instrument. It's a very open policy, an open procedure. And they just say this quarter, we're going to go out in the market and buy back $10 million worth of stock. And we're going to take it out of the market.
So it's a very simple process. It's a very, like you said, upfront, open book, which a lot of, these publicly traded companies, Wall Street, very dark, very murky, very behind the scenes. This is in your face, open and honest.
Quote unquote.
Like we always like to use when we're talking about topics like this. But in the simplest form, this is a company thinking that it's undervalued and proceeding to then buy back a certain amount of their shares, whether it's a percentage, a dollar amount, whatever. They announce that, and prices tend to surge, go down, stay the same.
It depends. It's always going to depend on the company. Often, any sort of share buyback is good for a stock. Usually, companies going out and buying their own stock, like Brian said. Where the idea of a buyback came from was you believed that your company at current levels, at the current share price, was undervalued. So you thought it would be a smart investment, a smart way to use some of your money to buy your own stock, wait for that share price to go up because you know kind of what's coming down the pipeline a little bit. You think things are going to get a lot better than they are right now, and you just sell it back when the company's share price appreciates. Mm-hmm. So you're just betting on the stock price to go up. You're betting on yourself. Usually when they announce it, price jumps, right? People are excited about the share buybacks.
Yeah, anytime there's news, good or bad about a company, you do see an up or down tick, based on whatever. The second it's mentioned on TV, like we like to say, we talked about the short position, like you talk bad about a company because you want that price to go down. It's kind of the same idea. It's, we're doing a buyback. You're saying that we're undervalued. We're better than this. We can do better.
We believe in ourselves so much that we're going to spend our own money, on just buying our stock back.
The Life Happens podcast is doing a buyback. We are very undervalued right now, and we are buying ourselves back now.
Yes.
As is tradition, this buyback system, this buyback maneuver, like you mentioned, was illegal up until 1982.
Yeah. So,
and we said, nah, they're cool now.
There's been a lot of back and forth on should it be illegal, shouldn't it be illegal, and we'll get into kind of why people argue it should, and that's why this gets really interesting. Because the company buying back their own stock doesn't sound all that scary, but the reason why they do it nowadays is the problem. So anytime something's allowed in financial markets, right, in the stock market, in Wall Street, people take it too far. They take it to the extreme. And usually a few bad apples kind of ruin the pot for everybody. And so that's essentially what the problem is with share buybacks. So companies now spend their money not solely, they spend all of the money they should be spending on research and development, on building new products, on building new services. Instead of spending money doing that and growing the company, they just buy back their own stock every quarter, nonstop, almost in perpetuity forever. Because it's supply and demand. If there is less stock out there every quarter and the same general supply demand of that stock, the price is going to go up. It's just a function of supply and demand. And what's tied to a rising stock price is CEO compensation. most of the large CEOs of, your Fortune 500 companies like that, they make most of their money in stock options. They don't like get paid a salary of $20 million
Yeah,
a year.
the baseline for a CEO on paper is
Yeah, maybe $1 million, $2 million.
insanely minimal compared to the incentives and the less liquid packages that they do get with the company.
Oh yeah, a bank CEO could have a big bank, a national bank, could have $1.5 million annual salary with 25 million annual stock option bonuses. So, we're talking 20 times their salary and potential bonuses, all based on them just getting the share price up. So now we start to see where things kind of go awry a little bit and how this can be seen as a negative. Because if companies, we talked about this in the podcast, previous episodes, if you really want to get into it, I definitely suggest you go back. But what makes an economy function is people producing things, generally we call them goods and services, and selling them to other people. We said it before. I grow bananas. You need them. I sell them to you. You pay me for them.
The
it's
foundation of economics as a whole.
Yeah, like the most basic principle of economics.
That's what we do here.
And now what these companies are doing is they're not trying to grow or produce anything new, or they're not trying to grow the company organically by making a new widget or a new service or offering a new product.
Or enhancing their own.
They're just or enhancing what they already have. They're just focusing on spending all of their profits, because that's where this money is coming from, the company's profits, on getting the share price to go up. Then we get into the idea of where, maybe that money could be better spent elsewhere, which is what we're going to get into next. But that's kind of where we're at. And that leads to the CEO pay gap problem that, is a huge issue.
Yeah, I think it's insane. I mean, I would use, my job as an example, but I won't because I don't want to get in trouble. But let's say hypothetically, like on paper, you're making $500,000 annual salary, but at your quarterly meeting, you're getting cut a check for $6 million each and every time. That's an insane amount of money, but that's the reality that we live in. And if you can spend that money to make money versus spending the money for, like you said, research and development, improving your product, improving, the company overall as was intended, you're gonna get shown the door, and they're gonna bring in a guy who's gonna do what
drive the share price up.
What they want, to drive the share price up, because at the end of the day, that's really the end game. But do we see, and it's kind of off the cuff, but like, are we seeing an increase in buyback announcements versus, let's say, illegal up until 1982? So let's say 82 to 92 versus 02 to 2012, or even 2012 to present day. I would imagine that as physical currency and the way that money moves and the way that they've, these financial numbers have exploded.
Yeah, just mass quantities.
Just mass quantities of these numbers. Because when you see the old movies with the briefcase at like $1 million and it was like a briefcase full of cash, that's a hell of a lot different than getting a text or looking at your phone and seeing an amount that says, $1 million, like 2 commas and a decimal point. Like, are we seeing an increase in these maneuvers? And is it honestly, like, is it helping the company, or is it just helping the people at the top?
Well, that's a big part of the argument, right? Is like they like to argue that they're helping the company. If the company's worth more, they can, raise money cheaper, all these variables. But at the end of the day, the big problem that this causes is that CEO pay gap. And that's what we're seeing grow. We have seen this whole idea grow in popularity more, definitely infinitely. I would say it's probably been an exponential curve since 1982, since it was made illegal. I can only
imagine.
For, I ran the numbers from 2009 to 2019, that 10-year span.
Yes.
The company's just in the S&P 500. So just 500 companies just here in the US spent $4 trillion on buybacks with a T. That was roughly 50% of their overall net income of all the companies.
What's the national debt right now?
27 trillion.
That's
but
insane.
$4 trillion a year. right now. If they pass all the stimulus packages, we'll be fortunately under. Anyway, so yeah, they spent $4 trillion. So basically enough to run the United States for a year in a pandemic, just buying back their own stock to get the share price to go up. In that time, CEO pay, this is a nice metric that people love to talk about, is how much they make compared to the average worker at their company, the average worker in America.
Stat.
It's a great one. So since the change in 82, in 1982, the average CEO made 50 times their average worker. Seems, maybe not too crazy, right? They probably have 50 times the responsibility of the
No, you're the CEO for a reason. Like completely, yeah. There's only one of you, bro.
People love to shit on that, and it's like, well, really? Because the buck stops with him and her at the end of the day.
No, that's fair.
But that's gone up 3x now. It's about 150 times the average employee wage since 1982.
To put that in perspective, it's the 50 times the average worker. That's the guy at the top floor. That's you understand that 3 times as much is somebody that you would think you would never meet in your entire life. That's like a celebrity type, like big, like never in a million years, like idea.
Yeah. And the growth in this is staggering. And it's something people like to talk about all the time. And
a lot of people 82.
Yeah.
That's the other thing.
Don't get back to the root cause though, and that's the problem. Like, why did it become legal again? Why was something that was once illegal in financial markets, because we knew it caused problems, made legal? And that's where it gets back to the problems at the most basic governmental level. Lobbying efforts by the rich companies who can afford to lobby, getting things passed. Like, if share buybacks are that bad, they shouldn't be allowed, right? Or they should be regulated. But we don't do that, and that's not the company's fault. Maybe they should act with more integrity, right? Maybe they shouldn't be spending money on buybacks just to boost the stock price, but they are, because they're allowed to. So can we blame them if that's the rules? If those just the rule book, there's no problems with it. I don't know that it's always going to be the company's fault so much as it's the regulations and the regulators' fault for allowing it to go on.
I mean, the regulators are extremely asleep at the wheel, underfunded, understaffed, and don't know where to look, because if you blow the whistle on one guy, you got to blow them on them all, and you really can't do it. I just looked it up real quick.
Yeah.
Stock buybacks were illegal until 1982, but obviously they were made legal. The SEC commissioners argued at the time that the rule would encourage higher stock prices, therefore benefiting investors across the board.
But again, this leads to, let's take the CEO.
Stocks only go up.
Let's take the CEO out of the picture, though. And let's not even talk about him. That motion alone still contributes to the wealth divide, because the bottom 50% of the country doesn't own stocks. So the SEC is saying right there, stocks going up is going to help investors, not everyone, just people who own stocks. And that's not the bottom 50% of the country. So that right there is the government increasing the wealth divide, like blatantly,
and in retrospect, because like you just said, and we've talked about it on this show, it is only recently that, the Robin Hoods, which don't get Robin Hood, Acorns, whatever, has given the average Joe the ability to invest and join the stock market. This has only recently happened. Up until now, you had to go to a brokerage firm. You had to go and you had to get dressed up. You had to make appointments. You had to know a guy. Like, I got a money guy. That was a term. That was a statement that used to be a thing.
It wasn't just download a new app.
Exactly. In the upper class. Now you take $100, you take $500, whatever you're comfortable with. And, you dabble, but that was never a thing. So you're right. In 1982, to hear that, you're talking about the top 10 to 25% of Americans who just basically were lobbied basically to be able to repeal that and just drive that money up, keep the average Joe down. And, it's a theme that we have seen again and again, and it gets frustrating.
And to pivot for a quick second, this is my big problem with these arguments. Like, share buybacks might not be the worst thing in the world, but we see now, when you start to peel back the layers, that at the most basic level, usually the government who's causing a lot of these problems, they run the SEC. It's a government entity. They made the decision, the argument that this would be good for share price, ergo good for investors, when
They
really
did.
we
This
know
is the
that's,
SEC that did that.
yeah,
Correct.
the Securities and Exchanges Commission. So really they know that's only the top 20, 25% of the country, but they did it anyway. So the same government that causes the problem, we then turn back to and look for them for the solution in handouts. And that's where we need to get away from. We need to stop
Mhm.
like pretending that our government has all the answers and they're these magic beings. They're just freaking people like you and I. They get shit wrong, right? But they don't like to admit it. It's hard to admit it as the government. Like, hey guys, we really fucked up Social Security. It's going to be insolvent in 20 years. Our bad. Like, you can't just come out and say that.
That you are 100% right and on the right track. Like, it's insane how much like the ideology of one, the government giving a shit about you at all.
Yeah, the fact that people think that the government like cares about them. I'm
They
sorry,
don't.
but
Two,
you are a pawn in a chess game, a serf
let's
to a king.
let's
Sorry,
take it a
go.
step. You're the income. You're the income for the government.
Yeah.
That's what you are. Now, take it a step further, and all the laws and everything else that are being passed are to improve, help, and encourage this type of behavior for the ones that are in the room. That when I say in the room, that's who I mean, right? I mean that top 10%. I actually now mean like the top top 5% of people, that none of which, like the majority of which aren't malicious, by the way. Like, I'm not saying that
No,
everyone that's rich is terrible.
no,
That's
not at all.
that's not even close to what I'm saying. I'm saying that they're opening doors that you, me, and Joey down the street aren't going to have access to, won't be able to take advantage of and set themselves up. So as they sprint down the highway, we're basically going in reverse.
Yeah, but they're also making moves that apply to everyone, right? Like this rule, like I said, it indirectly applies to the bottom 50% because nothing happens to them. They just slowly over time feel as though something's gone wrong and they've gotten poorer, but they can't put their finger on it because
Right.
it's hard to tangibly figure out why somebody else is like doing a little bit better than you and you just don't know they have stocks and you don't.
Right.
Um, and
That's
so
actually
all
interesting.
all the while, the little guy is slowly, the bottom 50% of our country, slowly being robbed of their purchasing power, their fair chance. And it's directly due to the actions of our government. And then the government turns around and says, "We're going to create a war on poverty, and we're going to bring all you people up that we put in poverty out of poverty." Like I'm at my wits' end with our government and
And just,
they're starting fires and then coming to the rescue as the firemen and saying, "Aren't you glad we're here?"
yeah, just that.
It's
Yeah, they have a
just
butane
had
torch and a
enough.
hose in their hands. Like, it's insane to me because, and you're 100% right. Like, the the thought of, the war on poverty, we're going to bring people up, we're going to have these programs, shit like that. And then the real big fight is the people that are on the cusp, that middle class that's been buried down but still isn't on that poverty line, who isn't being helped or touched or anything at all, is just screaming at the government.
Yeah.
Or poor people screaming at poor people, like, these fucking government handouts, like, this is bullshit, like, da da da. It's like, dude, think about it on a grand scale. We are all in the same boat here. Now,
Yeah.
some have an ocean view, others have no windows, but we're all in the
Somebody's got
same
a
boat.
porthole.
Like, exactly, but you know what I mean? Some of us
Yeah.
are in the fucking engine room, and we all know what we all saw that movie. It's like, but again, we're all in the same boat. So
Yeah.
it blows my mind. And again, this is just, and it's not behind closed doors. It's not in a back room, drinking brandy, smoking cigars, doing this. This is up front. It's in your face, and we're lining our pockets because we want our stock price to go up higher.
Yeah. And this is how CEOs have been able to make so much money. You see headlines all the time about how much they make. It's all due to stock options. It's all due to their bonuses. None of it's due to their actual base pay. And almost all of
No.
that is based off share price. That's why you see most people don't know this. That's why you see it fluctuate so much all the time. Like you see headlines, Elon Musk made $10 billion today. Elon Musk lost $20 billion today just because he owns all of his wealth is in Tesla stock.
Yeah, he just
That, that's
he
why
doesn't
Jeff
get a
Bezos is the
he,
richest man in the world, because
like
all of his wealth is in Amazon stock.
like every other Friday or whatever, you check your bank account, you're like, oh, good, I got paid, or like whatever. You think Elon Musk is fucking doing that? Like looking at his bank account and being like, oh, I hope I got paid. It's the first. Like, no, that check that's not his base. I mean, his base salary that like comes out like goes to him.
Oh
No,
yeah,
it's his check every quarter or every dividend payment or that's his paycheck. It's not, he wouldn't even notice if that showed up in his account.
no, probably not.
Well, that's an extreme example, but the majority of CEOs wouldn't really even blink.
No, so kind of circling back a little bit, we CEO pays out of control.
Sorry,
We all
I am
know
triggered.
that.
I am fired up. That's
No, I
bad.
know, man. I want to get back to that 4 trillion figure because it's massive and it's not quite. These days we talk about trillions of dollars as though it's commonplace. Up until
Which is insane.
the great financial crisis of 08, even then it wasn't quite commonplace. It wasn't as acceptable to talk in trillions of dollars. It's really only due to coronavirus and this pandemic, and how much money we're spending every year.
That was an astronomical number.
Yeah.
Then
so we're talking over a 10-year span, $4 trillion that was spent on buybacks. Now, if that was illegal, the companies would have generally had to find a way to spend that money productively, right? So usually they might buy some new equipment, they might build a new factory, they might hire more people, they might spend on R&D. All of that creates generally some middle-class jobs. It helps boost our GDP as a country.
Actually turn the wheels in the economy.
Yeah, we start producing things here in the US a little more so we can help fix our trade balance a little bit. It's not all that simple, but these are all things that could have happened if this money wasn't spent to drive share price up to line CEOs' pockets. And also keep in mind, at the same time, increase the wealth divide and benefit the top 20% and not the bottom 50%, while the middle 30 just is lost in no man's land. That's the decline of the middle class. So,
well, I mean, at the end of the day, I mean, at least they're using their profit money to buy their stocks back. It's not like they're taking on more debt and just telling everyone to pound sand, and they're just wanting to drive that price up.
Some of them do. Some of them take on debt to buy back the stock. Yes.
So you're saying that these companies are going to take out a loan to buy their company back from the public?
Correct.
What are we doing here? What are we doing here?
Yeah. They will also take on debt to pay for their dividends. A company like say ExxonMobil, their share price fluctuates off the price of oil. When oil goes up, they're doing great. When oil goes down, they're doing bad.
That makes sense.
But they try, a lot of the oil companies try and pay a high dividend to incentivize people to own the stock no matter what. You're going to hold on to your Exxon stock because they pay you 6% of your money every quarter. Well, when the share price plummeted due to COVID and all the lockups, they were spending more on the dividend to pay their shareholders than they made in profits. So they had to issue debt to pay the dividends out to shareholders instead of cutting the dividends and just maybe turning a profit. So they do all sorts of crazy shit with the financial engineering, but yeah, they do take on debt to do share buybacks.
I wonder if they look at it, like they look at the number and they say to themselves, like, all right, we either pay it out, like what's, not to, drag it on, but like, what's the worst scenario is your dividends payout didn't meet expectations, so it's a little bit lower, and then that in turn, gets that snowball going in the media and everything else, because you have quarterly reports and all that shit.
Yeah, then people dump the stock.
Right, and now you've started that train, or you kind of backdoor it. You take on debt to pay the number that you're supposed to pay, and kind of not keep the lights on, because we're talking about literally ExxonMobil, but
yeah,
you're basically,
but for simplicity's sake,
Exactly. You're basically taking on debt and saying, it's going to go back up. It should be fine. Like,
Yeah, yeah, and
keep it moving, right?
it's extremely commonplace. It's regular. It's kind of wild to think about, but yeah, that's what they do. They would rather take on debt and assume things are going to turn around in the future than cut the dividend because they know that will cause the share price to go down. The share price goes down, the company's worth less, but really bonuses at the top are cut.
So
And that's a big no-no.
I have in front of me, this is just in 2021. Just
Okay,
in
and keep in mind,
2021.
spending in 2021 should not be crazy because we're just coming out of pandemic, and most of these companies are in horrible financial shape due to the pandemic. So,
I have the complete opposite in front of me. So 37 companies,
okay.
Mind you, we just got into the 4th month of the year, right? 37
April
companies.
6th
Let me rattle off some familiar names here. And it goes from January 1 to March 18th, because whatever. Bank of America, Key Corp, Fidelity, eBay, Columbia Sportswear, O'Reilly Automotive. Here are the other big ones. Sherwin-Williams.
I was going to say, you haven't mentioned Apple yet.
Walmart.
Oh, yeah.
Dollar Tree, DuPont, Johnson Controls, and Dollar General, the most recent. $2 billion. $4 billion for Johnson. $2 billion for Dollar Tree. I don't know Agilent, but $2 billion. Rest are triple millions. That's Columbia was 400 million. Like and the percents that they're buying back are pretty substantial. They're not 1 or 2. Where like eBay bought back 10% at 4 billion. Like
that's
these
huge.
That's companies.
Huge.
That is I just saw this in real time, but that is an insane number.
Yeah.
Buying back 10. All right, so eBay's in trouble. Buying 10%.
Or some of these
they don't
could
sponsor
be
the show, so we can say that.
Some of these could be genuine though. Some of these companies could feel like their stock has been beaten to shit due to COVID, and they know that they're okay to weather the storm. They know the prospects they have on the horizon, and they know it's a good long-term investment for them. So that there is always the chance that these are genuine, smart, intelligent investments with a reasonable percentage of their profit.
We probably should defend that side a little bit.
Yeah, we have to factor that in as well. Some of these companies simply know what's coming down the pipeline for them. They know where their share price is today. They know where they think it's going to be in the future based on, they understand the company better than anyone else, right? It's the CEO generally and the C-suite making these decisions, or the board rather. So they're just betting on themselves, to be fair. It's not,
it's true,
as an idea, the most egregious thing one could do in the financial markets.
I hate that that banks are publicly traded. I hate it.
Interesting.
I just happen to say, like, I just was looking at it, but because we're just talking now, but like I
did have one more point I wanted to touch on.
No, please do.
Which is this has now transitioned. So the general concept being, you announce a share buyback, you buy back your own stock, you drive the price up. So instead of spending your money productively, your profits productively, you spend on your own stock. Now we're seeing the same thing happen with Bitcoin. Companies are taking a large chunk of their profits, and instead of investing them in the company, they go park them in Bitcoin. They hope that Bitcoin goes up in price, so therefore their share price will go up in price. There's been some companies that have invested. So there's one company that was worth something like $1 billion. They had like $1 billion market cap, call it a $10 billion market cap, actually.
Fuck it.
They bought $2 billion worth of Bitcoin, and then their stock price went up $6 billion. So figure the math out there. Nothing
just
happened.
Just because they said they were buying Bitcoin.
Yep, people piled into the stock, drove the share price up something crazy because everyone thought these guys are so smart. Look at what they're doing.
Because you have the Bitcoin Knights out there that are like ready to go.
They bought like $2 billion worth of Bitcoin and saw their market cap go up by like 6 or 7 billion. So and now other companies catch on to that and they're like, wow, that's an easy investment. Instead of me spending this money productively to produce more goods and services, let me just buy some Bitcoin.
Just say Bitcoin. Just be on TV. Just say Bitcoin. Say the word Bitcoin.
Yeah, that's all you have to do.
Should be fine.
Remember when, oh God, who was it? IHOP made a joke about doing something with the blockchain. It was like 2 or 3 years ago when Bitcoin was.
Do you remember when IHOP said that they were just going to make burgers? That's what
I don't.
that's what it is.
Yeah, they're just, I guess there's marketing gimmicks and they latch on to anything. But yeah, there was people who were throwing
For like a week.
blockchain in their name. There are people just changing the structure of their company to look like they were a blockchain related, Bitcoin related company. It's just craziness.
It's all a gimmick, and it's to raise quick cash before anybody actually takes the look, like you're talking about. Like who's investing? Like who's investigating this? Is it illegal? No, technically not. Like unless you publicly said you were going to do, like you were doing something and didn't do it. But
is it accretive to the economy though? And I would argue no. It's not good for our economy to be spending money this way. And some other, quick stats before we wrap up here that I think people would be interested to know.
Yes, please.
So in 2018, which was before the pandemic, right? So companies should have been kind of operating business as usual. 2018 was a pretty good year for stocks. There was a significant crash. Yeah. But overall, not a bad year. In 2018, less than 50% of companies in the S&P 500, so the largest 500 companies in the country, only half of them spent money on research and development, trying to.
So only half of them are trying to improve.
Half of the 500 largest companies in this country, so 250 of the largest companies in this country, spent no money on research and development in 2018. That was before the pandemic, but many of them did do buybacks. So there's money for buybacks, but there's not money for R&D. Again, R&D would probably create some jobs, add to our country's GDP. And we were talking earlier about how much of this is funded by debt. Stat I forgot to bring up. In general, over the course of time, about 30% of share buybacks are funded by issuing debt. So almost a third.
Wait, what was that number?
30% of share buybacks.
30%?
Are funded by companies taking on debt instead of actually spending extra cash they have or profits, just funded by debt. So that leads to the debt problem and all of it.
So when that price goes up as they expect, do they expect, like, is the expectation that the debt that they used to do what they did is now erased because we're at the price we're at?
Yeah, their bet is that they will have made more off the share price appreciating than they would have to pay.
I mean, it's risky, don't get me wrong,
on the debt they issued, but it's not that risky nowadays because like Apple can issue debt at like 1%. Like they'll issue.
Yeah, it's all free. That's right. Yeah, it's all.
Apple issues a bond like they're a government at 1%. So like, what's 1% interest to a company like Apple? When they can get their share price to go up 10% in a year.
Yeah, it's pocket change at that point.
Yeah, so it's really, I think it's something that needs to be investigated as we start to talk about the wealth divide problem in this country. I think the wealth divide problem in this country is not going to get any better given what's happened over the past 2 years in the pandemic. A lot of people being put on what's basically universal basic income, all of these unemployment benefits, the free money from the government, people now looking for handouts instead of looking to work. While we've talked about all these large companies are allowed to stay open and operate and rake in record profits, that is going to continue to lead to the wealth divide. And these things need to be talked about and looked at, or it's just going to keep getting worse and people are going to bitch and not understand why. The hope is that we can teach people the why a little bit here.
I like to be optimistic, but honestly, I think that there's going to be a complete, I don't want to say overthrow or revolt, but honestly, like I think people are starting to understand. I think they're getting pretty sick and tired, and I don't think there's enough time to mend the gap or mend the wound, really is what I should call it. Mend the wound that is this separation. It's insane. And I don't want to end on a sad note, but at the end of the day, truly, like,
we have to treat it how it is. We have to assess the situation as
it's upsetting. In front of us. It's upsetting, and
we can't sugarcoat it. And even if you remove all of the, let's remove all of the facts, all of the data. Go to your most primal, basic gut instinct. We talked about this.
All right, now we're the news. All right, go ahead.
No. We all know that there's a protected class and the rest of us in this country. That the rich, celebrities, the top 1%, top 0.1%, they get to do things you and I don't do, right? Like, how's that guy get out of speeding tickets? Oh, he knows the mayor. Like, even little things like that in your local town.
Even little things like that.
There are different levels of class in this country, the elite, and everyone knows that at the most basic level, even without any of this data, everyone knows the wealth divide is horrible. The rich get treated differently. They get more opportunities than everyone else. We all know it, and that's becoming a problem because more and more people are on the not receiving ends, for lack of a better word,
more, a lot more
of that equation. So that's
yeah,
the concern for the long run, and we're hoping to spark some conversation around it.
yeah. It's something that needs to be discussed. It's something that needs to be actioned on, really, and it's going to lead us into further discussion as we continue the show. In the coming weeks, like all of these practices, all are bogging the average American down, because the average American is now closer to the poverty line than he is to the top by astronomical amounts.
As of 2018, a single parent cannot raise a family in this country anymore. So there's a chart that'll show you the cost of living versus the average male income. They track male income because it's what they have the most data on. It's not sexist. It's been around longer. As of 2018, the cost of living in the United States to raise a family of 4, so parents and 2 kids, that's it, cannot be covered by the median salary in this country. So we're at a crossroads. We're at a literal crossroads where those 2 lines on the graph have crossed, and income continues to go down and the cost of living continues to go up. So it's only going to get worse unless we start to hold our government accountable for these policies that they allow and enact. That's where it comes back to. It comes back to holding the government accountable and educating people so they know.
And that's what this show does.
Yes, that's what we're trying to do.
Life Happens Podcast, at the Life Happens Podcast, on Instagram,
find us
on Twitter, on YouTube, Spotify, iTunes, and Podbean. Okay? Listen, watch, join us, because you need to stay informed. You need to be entertained, and you love our face.
Yeah, check us out. You guys know we say it every time, but if you enjoyed anything, throw us a like, throw us a review, right? It's a lot of fun. We enjoy the conversations, and I hope
it really does mean the world to us.
Somebody out there is learning a little something from it. So thank you guys for listening, and until next time.
Cheers.
Cheers.